Question 1. Which of the following is the primary distinction between cyber insurance and traditional insurance policies? A. Cyber insurance policies focus exclusively on covering data breaches, while traditional policies only cover physical property loss. B. Cyber insurance provides coverage for third-party damages, while traditional insurance exclusively covers first-party damages. C. Cyber insurance provides coverage for intangible risks like data breaches, whereas traditional insurance typically covers physical property and casualty risks. D. Cyber insurance premiums are calculated based on the business's asset value, unlike traditional insurance, which uses the market value of assets. Answer. C. Explanation. Cyber insurance differs fundamentally from traditional insurance policies in that it focuses on covering intangible risks, such as data breaches, ransomware attacks, and network security failures. Traditional insurance policies, on the other hand, are primarily designed to cover physical property and casualty risks. The scope of cyber insurance is specifically tailored to address the increasing reliance on digital systems and the unique risks they pose to businesses and individuals, including first-party costs like data breach management and third-party liability such as privacy violations. California law. California Consumer Privacy Act CPA emphasizes the growing need for specific insurance coverage addressing cyber risks such as data breaches. Question 2. Mr. Anderson, the chief information officer of a medium-sized business, discovers that his company's database has been compromised in a cyber attack, leading to a significant data breach. He is unsure whether his company's cyber insurance policy will cover the breach and whether the insurance company should be immediately notified. What should Mr. Anderson do? A. Mr. Anderson should first evaluate whether the breach is covered under the policy and delay notifying the insurer until he confirms the coverage. B. Mr. Anderson should immediately notify the insurance company, as most policies require timely reporting of incidents to qualify for coverage. C. Mr. Anderson should perform an internal audit of the breach and assess the financial damage before informing the insurance provider. D. Mr. Anderson should notify the legal team first and handle the insurance claim only if required by legal obligations. Answer. B. Explanation. Mr. Anderson should immediately notify the insurance company about the breach. Most cyber insurance policies have strict reporting requirements, often specifying that incidents must be reported within a certain time frame to be eligible for coverage. Delaying notification can result in denial of the claim. Cyber insurance policies are designed to address the financial impact of breaches, including first-party costs such as crisis management and legal fees. Under California law, particularly the California breach notification laws, timely reporting of data breaches is essential to mitigate further legal and financial repercussions. According to the California Consumer Privacy Act (CPA), businesses are obligated to notify affected individuals within specific timeframes, aligning with the requirement to notify insurers without delay. Question 3. Which of the following is a common exclusion found in most cyber insurance policies? A. Losses resulting from failure to implement security measures. B. Coverage for data breaches involving third-party vendors. C. Business interruption due to natural disasters. D. Cyber extortion costs in cases where a ransom is paid. Answer A. Explanation. A common exclusion in cyber insurance policies is losses resulting from the failure to implement proper security measures. This exclusion is based on the principle that policyholders must take reasonable steps to secure their systems and data. If a business is found negligent in its cybersecurity practices, such as failing to apply security patches or not using encryption, the insurer may deny the claim. The inclusion of this exclusion emphasizes the importance of policyholders actively managing their cyber risks. California law encourages businesses to adopt specific security measures to comply with the CCPA and other data protection regulations, which include adequate cybersecurity measures as part of reasonable care. The failure to adhere to these standards can lead to policy exclusions. Question 4. Which of the following cyber threats would most likely be covered under cyber insurance policies' first-party coverage? A. Legal defense costs related to a privacy violation lawsuit filed by a customer. B. The financial loss due to an employee falling victim to a phishing attack that compromises company data. C. Regulatory fines and penalties for failure to comply with the CCPA. D. Liability for a data breach affecting a third-party business partner's sensitive information. Answer. B. Explanation. First-party coverage in a cyber insurance policy typically covers direct costs incurred by the insured business due to a cyber event. This includes financial losses caused by cyber attacks like phishing that compromise internal data or systems. In this scenario, the financial loss resulting from an employee's phishing attack would likely be covered under first-party coverage. On the other hand, legal defense costs and regulatory fines, which are third-party liabilities or penalties, are typically covered under third-party coverage or excluded entirely. First-party coverage also includes crisis management, business interruption costs, and restoration of digital assets. Cyber insurance does not generally cover liability for third-party breaches or fines arising from regulatory non-compliance. Question 5. Which of the following is a requirement for businesses seeking cyber insurance under the California Consumer Privacy Act (CPA)? A. Businesses must implement multi-factor authentication to be eligible for coverage. B. Businesses must demonstrate a history of no previous cyber incidents or claims. C. Businesses must have a documented incident response plan in place. D. Businesses must comply with the Payment Card Industry Data Security Standard (ECESS) for coverage. Answer: C. Explanation. Under the California Consumer Privacy Act (CPA) and similar privacy regulations, businesses seeking cyber insurance must demonstrate that they have taken adequate steps to mitigate cybersecurity risks, including having a documented incident response plan. The plan outlines how a business will respond to a data breach, which is a critical component for ensuring that any breaches are handled properly and timely. While compliance with standards like PCI DSS or implementing multi-factor authentication can reduce risk, they are not mandatory for eligibility for all cyber insurance policies. Having an incident response plan in place helps mitigate risk and can influence underwriting decisions as insurers look for businesses that are proactive about their cybersecurity preparedness. Question 6. Which of the following would most likely be covered under third-party cyber insurance coverage? A. Costs for restoring data lost in a ransomware attack. B. Legal defense costs arising from a privacy violation lawsuit. C. Business interruption due to a cyber attack on internal systems. D. Costs of hiring a cybersecurity consultant to prevent future attacks. Answer: B. Explanation. Third-party coverage is designed to address the liabilities a business may face as a result of cyber incidents affecting other entities. This includes legal defense costs arising from privacy violations or lawsuits filed by affected parties, e.g., customers, clients, or partners. It also covers damages for data breaches impacting customer data and settlements or judgments related to those breaches. In contrast, first-party coverage would handle the costs associated with restoring data or business interruption directly affecting the insured business. Third-party coverage also typically includes costs related to regulatory fines, settlements, and legal fees stemming from a breach involving third-party data. Answer: B. Explanation. Under first-party coverage, Mr. Thompson would submit the ransom payment demanded by cybercriminals in a ransomware attack. This type of cost is specifically covered under the first-party coverage of cyber insurance, which includes costs for restoring the company's systems, paying a ransom to regain control of systems, crisis management, and digital asset restoration. Legal costs, regulatory fines, and third-party settlements are typically handled under third-party coverage or excluded entirely. First-party coverage protects the insured's direct financial interests, while third-party coverage addresses liabilities to outside parties impacted by the breach. Question 8. Which of the following best describes the role of an actuarial analysis in cyber insurance underwriting? A. Actuaries assess the financial impact of a potential breach on a business's customers. B. Actuaries calculate the premiums based on the likelihood of a cyber attack considering the business's size, industry, and security measures. C. Actuaries provide legal guidance on compliance with state and federal privacy laws. D. Actuaries help businesses implement cybersecurity measures to lower their risk exposure. Question 8. Which of the following best describes the role of an actuarial analysis in cyber insurance underwriting? A. Actuaries assess the financial impact of a potential breach on a business's customers. B. Actuaries calculate the premiums based on the likelihood of a cyber attack considering the business's size, industry, and security measures. C. Actuaries provide legal guidance on compliance with state and federal privacy laws. D. Actuaries help businesses implement cybersecurity measures to lower their risk exposure. Answer: B. Explanation. Actuarial analysis plays a key role in determining the premiums for cyber insurance policies. Actuaries assess the likelihood of a cyber event occurring by analyzing various factors such as the business's size, industry, and existing cybersecurity measures, e.g., encryption, firewalls. The goal is to assess risk and price premiums accordingly. While actuarial analysis helps quantify risks for underwriting purposes, it does not directly guide legal compliance or provide cybersecurity solutions. This process helps insurers set premiums that align with the perceived risk profile of each business, taking into account its cybersecurity posture and previous claims history. Question 9. Which of the following is typically not considered a specialized coverage under most cyber insurance policies? A. Media liability for online defamation. B. Errors and omissions in cyber services. C. Data breach notification costs for affected customers. D. Intellectual property infringement due to hacking. Answer. C. Explanation. Data breach notification costs are typically covered under first-party coverage, not specialized coverage. Specialized coverages such as media liability errors and omissions in cyber services and intellectual property infringement address more niche risks that a business may face in the digital space. Media liability covers defamation or infringement claims. Errors and omissions cover failures in the delivery of cyber services, and intellectual property infringement coverage addresses breaches involving copyrighted content or trade secrets. Data breach notification costs are more directly related to the first-party impact of a breach, and cyber insurance policies often cover the cost of notifying affected individuals as required by laws like the CCPA. Question 10. Which of the following is a significant factor influencing the underwriting process for cyber insurance policies? A. The total amount of a company's gross revenue. B. The company's overall level of cyber awareness among employees. C. The geographic location of the business's headquarters. D. The company's choice of business partners and vendors. Answer. B. Explanation. A company's overall level of cyber awareness among its employees is a significant factor influencing underwriting decisions. Insurers assess how well a business educates and trains its employees on cybersecurity risks, such as phishing and social engineering. A high level of cyber awareness can reduce the risk of an attack succeeding, which can impact the risk profile and, in turn, the premium. While factors like revenue and vendor relationships may play a role in assessing risk, employee awareness directly impacts a company's vulnerability to cyber threats. Cyber insurance policies often require businesses to demonstrate proactive measures to minimize risk, including training and awareness programs. Question 11. Which of the following scenarios would most likely trigger coverage under a cyber insurance policy's business interruption clause? A company's systems are down due to a ransomware attack leading to a halt in business operations. B. A customer files a lawsuit claiming the company did not protect their personal data. C. A company pays a ransom but does not recover any of the data. D. A competitor uses the company's intellectual property without authorization. Answer. A. Explanation. Business interruption coverage under a cyber insurance policy is designed to compensate for lost income due to an interruption in business operations caused by a covered cyber event, such as a ransomware attack. In this scenario, the attack has led to system downtime and halted business operations, triggering the business interruption clause. Other scenarios like lawsuits or IP infringement would likely not trigger business interruption coverage. Business interruption coverage generally includes loss of revenue, extra expenses incurred due to the attack, and costs associated with restoring normal operations. Question 12. Which of the following is the primary purpose of a cyber insurance policy's network security liability coverage? A. To protect against physical theft of company hardware and devices. B. To cover financial losses caused by a network breach that exposes sensitive data. C. To pay for regulatory fines due to a failure to report a data breach. D. To cover the costs of restoring data lost in a cyber attack. Answer. B. Explanation. Network security liability coverage under a cyber insurance policy primarily covers the financial losses resulting from a network breach that exposes sensitive data or allows unauthorized access to systems. This includes the costs associated with legal defense, settlements, and damages resulting from breaches that affect customers or third parties. While the policy may also include some aspects of restoring lost data, its core focus is on liability for breaches related to network security. Question 13. Which of the following is most likely to be excluded from a standard cyber insurance policy? A. Costs of notifying affected individuals about the data breach. B. Losses from a business interruption caused by a distributed denial of service (DDoS) attack. C. Legal fees for defending against claims of IP infringement. D. The cost of hiring a public relations firm to manage the company's reputation after a breach. Answer. C. Explanation. Legal fees for defending against intellectual property (IP) infringement claims are generally not covered by standard cyber insurance policies. While the policy may cover breaches of data security or privacy violations, IP infringement typically falls outside the scope of cyber insurance unless the policy includes specific IP coverage. Other costs, such as breach notification and business interruption, are commonly covered by most cyber insurance policies. Question 14. In the context of cyber insurance, what does the social engineering fraud coverage typically cover? A. Financial losses resulting from fraudulent emails or phishing attacks that trick employees into transferring funds or revealing sensitive information. B. Legal fees for defending against a lawsuit for failing to comply with data protection regulations. C. Regulatory fines imposed for failing to protect customer data. D. Costs associated with restoring data lost due to a cyber attack. Answer A. Explanation. Social engineering fraud coverage protects businesses from financial losses resulting from fraudulent schemes such as phishing or pretexting, where cybercriminals manipulate employees into transferring funds or revealing confidential information. This type of fraud typically targets employees through emails, phone calls, or fake websites to steal money or sensitive information. This coverage addresses the specific risks related to manipulation or deception, which are outside the scope of traditional cybersecurity measures. Question 15. Which of the following actions would most likely result in a denial of a cyber insurance claim? A. The company failed to patch known vulnerabilities in their system despite being aware of the risk. B. A company experienced a breach due to a malware attack but immediately reported it to their insurance provider. C. The company had a cybersecurity expert assess their security posture before purchasing coverage. D. A third-party vendor experienced a breach that affected the company's data. Answer A. Explanation. Insurance policies, including cyber insurance, often include a known loss cause that excludes coverage for incidents where the insured was aware of a specific vulnerability or risk but failed to take appropriate action to mitigate it. If the company knew about the vulnerability and did not patch it, the insurer may deny the claim on the grounds of negligence or failure to prevent. A foreseeable loss, timely reporting and proactive cybersecurity assessments, as mentioned in the other options, typically support claim eligibility. Question 16. What is the primary difference between first-party and third-party cyber insurance coverage? A. First-party coverage deals with the company's own expenses, while third-party coverage protects the company from liabilities owed to others. B. First-party coverage applies to physical damage to the company's hardware, while third-party coverage applies to financial losses. C. First-party coverage deals with data protection, while third-party coverage deals with network security. D. First-party coverage is for data breaches, while third-party coverage is for financial fraud. Answer A. Explanation. First-party coverage protects the insured company from its own losses, including costs to restore systems, pay ransoms, and cover business interruption expenses. Third-party coverage, on the other hand, protects the company from liabilities arising from breaches that affect others, such as lawsuits from customers or regulatory fines. First-party coverage is focused on internal costs, while third-party coverage is focused on external liabilities. Question 17. Which of the following statements about cyber insurance coverage for ransomware attacks is true? A. Ransomware coverage under most cyber insurance policies excludes any ransom payments. B. Cyber insurance policies generally cover the cost of paying a ransom to the attacker. C. Ransomware coverage is only available for businesses with more than $50 million in revenue. D. Ransomware coverage is typically excluded under most cyber insurance policies. Answer B. Explanation. Cyber insurance policies often include coverage for paying a ransom to cyber criminals. In the event of a ransomware attack, this coverage typically extends to ransom payments as part of the efforts to mitigate the attack's impact. However, some insurers may have specific conditions, such as requiring prior approval before paying the ransom or excluding certain types of attacks. Ransomware coverage is available to businesses of various sizes, and while some policies might have exclusions, many policies include ransom payments as part of the coverage. Question 18. Which of the following is typically required for a company to receive cyber insurance coverage for data breach incidents? A. The company must use multi-factor authentication for all sensitive data access. B. The company must demonstrate that they have a cybersecurity plan in place and regularly update their security protocols. C. The company must have a history of no previous cyber incidents. D. The company must be a publicly traded company. Answer: B. Explanation. Insurance providers typically require businesses to demonstrate that they have a cybersecurity plan in place and regularly update their security protocols as part of the underwriting process. This helps insurers assess the company's risk level and the likelihood of a cyber incident occurring, while multi-factor authentication and a clean history of cyber incidents can help reduce premiums or improve coverage terms. They are not always mandatory for receiving coverage. Regular updates to security protocols show the company is taking proactive steps to prevent breaches, which makes them a low risk for insurers. Question 19. What does a cyber insurance policy's privacy liability coverage protect against? A. Lawsuits related to the mishandling or breach of personal or sensitive data. B. Costs to restore data after a data loss incident. C. Damage to physical assets due to a cyber attack. D. The cost of hiring cybersecurity experts to prevent future attacks. Answer A. Explanation. Privacy liability coverage protects businesses against legal claims and lawsuits arising from the mishandling or breach of personal or sensitive data. This can include claims from individuals, customers, or third parties whose data has been exposed or misused. This type of coverage typically addresses the legal and regulatory costs associated with data breaches, including penalties and damages for violating privacy laws. Question 20. Which of the following would likely be excluded from a cyber insurance policy's coverage? A. The cost of restoring lost data due to a ransomware attack. B. Legal defense costs associated with a data breach lawsuit. C. Fines for failing to comply with data protection laws. D. Reputational damage resulting from a cyber attack. Answer D. Explanation. Reputational damage resulting from a cyber attack is generally not covered under standard cyber insurance policies. While policies can cover direct financial losses, legal fees, and compliance costs associated with a breach, reputational damage is intangible and typically excluded. Some specialized insurance products like reputation protection insurance may provide coverage for reputation damage, but this is not part of standard cyber insurance policies. Question 21. Which of the following would most likely trigger the cyber extortion coverage under cyber insurance policy? A. A company's employee accidentally leaks sensitive data to the public. B. Cyber criminals demand a ransom in exchange for not releasing stolen data to the public. C. A company's website is down due to a DDoS attack and it leads to lost business. D. A competitor hacks into a company's network to steal intellectual property. Answer B. Explanation. Cyber extortion coverage typically covers situations where cybercriminals demand ransom or threats, such as not releasing stolen data or stopping a cyber attack unless a ransom is paid. This type of coverage helps businesses handle ransom demands and the costs associated with paying or negotiating with extortionists. Question 22. What is typically the primary purpose of a cyber insurance policy's data breach response coverage? A. To pay for the costs of paying a ransom to a hacker. B. To cover the costs associated with repairing damaged hardware. C. To pay for the cost of investigating and managing the breach, including notifying affected parties. D. To cover fines and penalties for non-compliance with data protection regulations. Answer C. Explanation. Data breach response coverage helps companies cover the cost of investigating and managing the breach, including notifying affected individuals, public relations efforts, and forensic investigations. This coverage ensures businesses can respond quickly to a breach and mitigate further damage. Question 23. Which of the following would most likely be covered under cyber insurance policy's third-party liability coverage? A. Financial losses incurred due to a company's failure to prevent a phishing attack. B. Legal fees and damages resulting from a data breach that exposed customers' personal information. C. Costs associated with recovering encrypted data from a ransomware attack. D. The cost of upgrading a company's security system after a breach. Answer B. Explanation. Third-party liability coverage is designed to cover legal costs and damages resulting from a breach that affects customers, clients, or other third parties. This typically includes legal defense costs and settlements or judgments for exposing sensitive data due to a cyber attack or data breach. Question 24. Which of the following is typically excluded from cyber insurance coverage? A. Costs to restore data after a cyber attack. B. Legal defense costs related to a data breach. C. Reputational damage to the company's brand following a cyber attack. D. The costs of identity theft monitoring services for customers affected by a breach. Answer C. Explanation. Reputational damage, while potentially a significant consequence of a cyber attack, is generally not covered by most cyber insurance policies. Most cyber insurance policies focus on tangible financial losses, such as data recovery, legal costs, and identity theft monitoring, but intangible losses like reputational damage are typically excluded. Question 25. Which of the following best describes the role of cybersecurity audit requirements in obtaining cyber insurance coverage? A. Audits are required to determine the financial value of the company's data assets. B. Cybersecurity audits are required to demonstrate a company's commitment to preventing cyber risks and reducing premiums. C. Cybersecurity audits are used to assess the physical security of the company's hardware. D. Audits are not typically required by insurers, but some may offer discounts for performing one. Answer B. Explanation. Insurers often require companies to undergo cybersecurity audits to assess the effectiveness of their security posture. A positive audit that demonstrates robust cybersecurity measures can help reduce premiums or increase the company's likelihood of qualifying for coverage. Audits help identify vulnerabilities and mitigate risks that might result in a claim. Question 26. Which of the following is generally a requirement for a company to qualify for cyber insurance coverage under the Business Interruption Clause? A. The company must have insurance that covers data loss from physical theft. B. The company must maintain a proactive incident response plan and business continuity plan. C. The company must be able to prove that no employees use personal devices for business activities. D. The company must have no previous history of cyber attacks. Answer B. Explanation. To qualify for business interruption coverage under a cyber insurance policy, a company must typically demonstrate that it has a proactive incident response plan and a business continuity plan in place. This ensures that the company is prepared to quickly recover from a cyber attack and minimize the impact on business operations. Question 27. Which of the following cyber incidents would most likely fall under cyber insurance policies social engineering fraud coverage? A. A ransomware attack encrypts a company's files, demanding payment for a decryption key. B. A cybercriminal impersonates an executive and convinces an employee to transfer company funds. C. A third party accesses the company's sensitive data and sells it on the dark web. D. A DDoS attack prevents customers from accessing the company's website for several days. Answer B. Explanation. Social engineering fraud coverage is designed to protect against financial losses from schemes where cybercriminals manipulate employees or individuals to perform fraudulent actions, such as transferring funds or revealing sensitive information. This typically involves deceptive tactics like phishing, pretexting, or impersonation. Question 20. In the context of cyber insurance, what is business income coverage typically designed to cover? A. The cost of paying hackers in a ransomware attack. B. The loss of revenue due to an interruption in business operations caused by a cyber attack. C. Costs to replace lost or damaged hardware after a cyber attack. D. The cost of upgrading security systems after a breach. Answer B. Explanation. Business income coverage under a cyber insurance policy typically compensates for the loss of revenue due to an interruption in business operations caused by a covered cyber event, such as a ransomware attack or data breach. This coverage helps businesses maintain financial stability while recovering from the attack. Question 29. Which of the following would likely trigger coverage under a network security liability clause of a cyber insurance policy? A. A company pays a ransom to regain access to encrypted data. B. An employee inadvertently exposes sensitive data by sending it to the wrong recipient. C. A cybercriminal accesses a company's customer database and steals personal information. D. A company's servers are damaged in a cyber attack. Answer C. Explanation. Network security liability coverage protects businesses against claims arising from breaches of network security, such as unauthorized access to a company's systems or databases by cybercriminals. This type of coverage typically includes claims from customers or third parties whose data has been compromised. Question 30. What is the purpose of the data breach notification coverage under cyber insurance policy? A. To pay for the legal fees associated with defending a breach lawsuit. B. To cover the costs of informing affected individuals about a data breach and providing identity theft protection. C. To provide coverage for lost business income during a data breach. D. To cover the costs associated with repairing damaged hardware from a cyber attack. Answer B. Explanation. Data breach notification coverage is designed to cover the costs of notifying affected individuals, regulators, and the public about a data breach. It also often includes the cost of offering identity theft protection services to affected individuals, ensuring compliance with privacy laws and regulations.